Get your thoughts too on what you made of the market performance today.
Bridie, look, it certainly was a stunning turnaround, as you have mentioned. I think it was mostly to be expected, as Michael said. It does seem like it's been a bit of a continuing theme, what we did see on the markets today, and it actually seemed like we followed a similar performance to what we saw over in the US, where we actually did see a lot of those indices picking up throughout the afternoon. So certainly saw that volatility on our market today. Just before midday, we saw the market hitting about 51.62, so hit that low and then obviously picked up from there and continued that strength throughout the afternoon. Of course, this morning led lower by those leads, but we did see a stunning turnaround in those financial stocks, all of the major banks closing up, and I think that financial sector was up about 0.5% in the end. And as you have mentioned, that energy sector really being the standout and the interesting one, despite seeing those oil prices really falling to 4-year lows. Volumes today were also very strong. Over $5.5 billion went through, and that is actually higher than what we have seen on markets recently. So I certainly think that indicates a sign that investors are finding a lot of value in some of these stocks, and certainly some confidence, I think, coming back into the market. But it certainly was a pretty turbulent and volatile day.
Let's talk iron ore stocks, but in particular, just firstly, Leanne, if we could start with you on Fortescue, because it reported stronger than expected result with that production number, but has been sold off. What was behind that?
It was such an interesting one in Fortescue today, as you say, closing down about 6% in the end, so really was hit quite hard. I think investors are certainly still concerned about the outlook for that iron ore price, and also if we have a look at their realised prices that they received, they were down about 41% on year. So I think there is a bit of concern from investors that is going to have an impact on their earnings coming into the next year, so potentially putting some downward pressure on that share price today. But overall, that result that came through was actually stronger than expected in terms of their shipments and in terms of their costs as well. Of course, their shipments up about 60% on year. This was about 8% ahead of our forecast, and we also saw those costs falling off. Their net debt had reduced, and also their cash on hand was pretty strong as well. So overall, it actually did look like quite a positive result. They also reconfirmed their FY15 guidance in terms of their production, their shipments, their costs and their capex as well. And of course, that's always a pretty positive development as well. But overall, despite seeing a lot of these iron ore prices coming under pressure, we do quite like the outlook for Fortescue, despite seeing some of those earnings potentially being hit coming into FY15. We do think that that stronger free cash flow should start to support those increased dividends, and of course reducing that debt repayment as well. So overall, think there is some quite good value in this stock. It is down about 40% since the start of the year, so certainly an interesting one, seeing it under pressure today.
And that sector helping the overall market turn around today as well. Woodside shares up 1.7%. Leanne, wanted to ask you, because they upped their annual production guidance alongside putting on a 46% jump in third quarter revenue. What do you think of this one? You know, if you're looking for yield, if you're looking for growth, is Woodside the answer?
Bridie, certainly if we have a look at some of those underlying fundamentals, and of course being confirmed by that very strong report, as you mentioned, coming out today, I think they do look quite strong. As you say, still maintaining that dividend payout ratio at about 80%, that dividend yield at about 6 to 7%. So it is very strong if you are a high yield investor looking for a stock such as this. So I do certainly like the underlying fundamentals. That balance sheet is very strong, low net debt, but I think there still is a lot of concern out there potentially from investors, and I know some analysts as well, in terms of their growth prospects. We know that recently they have continued to a sort of a disciplined approach to some of those new opportunities. We know they have signed some of those exploration permits. They've taken a stake in some of those permits with Beach Energy and so forth. But I think we need to start hearing more out from the company in terms of how they plan to distribute a lot of their cash, whether it will be through acquisitions or special dividends or increased dividends to shareholders. So I think there still is a little bit of concern. We know that their production profile will start to potentially fall off. So they certainly have been under a little bit of pressure in terms of that, and I think there is still a little bit of concern out there. But I think at these levels, I do think it still does remain a very good underlying stock, particularly given the high dividend yield that is involved.
10 result today, third consecutive annual loss there. They say their audience numbers are looking better though. What's your outlook, and why was the stock up today?
Bridie, it was certainly an interesting one. Initially, we did see the stock coming under pressure, but we did see it closing up over 5%, so certainly saw a very nice turnaround. The result that actually came through was weak, but I think that was to be expected. But if we see that underlying loss, it was about a 41% improvement on the last year. Those revenues were basically in line with what the company had guided to, and there was no dividend as expected. We know those costs had increased about 7%, but again, that was slightly below what the company had forecasted. So overall, I think the result was probably mostly to be expected, and we might have actually seen that turnaround in the share price in relation to their outlook. So some of the key points that we were looking out for were in terms of their revenue expectations for FY15. They are expecting that advertising market for some moderate growth coming into FY15. In terms of their cost strategy, expecting costs to start reducing by about 8% in FY15, and we were also looking for an update on any new programming as well, and we know that they do have several new programs lined up. So all of that I think looked pretty positive, and that's why we might have possibly seen a stronger performance in the share price. But overall, I think the outlook still does remain very cautious. I think their revenues will continue to come under pressure. We know that that advertising market really does remain very challenging for them, particularly in terms of those poor ratings as well. So I think it is going to be a bit of a waiting game in terms of seeing whether those programming decisions will actually start to translate into revenues. So for the moment and at this stage, we probably do remain a bit of a cautious on this stock, certainly expecting the outlook to still remain pretty challenging.
Leanne, thank you so much for that and for joining us today.
Thanks, Bridie.